Well, hello again, Solis. Well, family, Greg Solis here for our update. First of all, it was so good seeing you all at the client appreciation party. What a great time. What a beautiful evening. And like I said that night, for those of you that were there, we truly appreciate you. And the client appreciation party is all about that, is to really demonstrate how much we appreciate your trust and confidence. We don't take that lightly. We know it's a big deal. And for those of you that were there, great seeing you. For those of you that were not there, we missed you, and I hope you'll be there next year. But do know how much we appreciate our clients. Family wise, it was great having Nicole in town. She came in town for her birthday. We had a great celebration celebrating her 21st birthday, so that was cool. Emily is doing great. She's getting some applications actually already submitted for college. So that's an exciting time for us. Can't wait to hear back from some of those colleges. Jack's doing great, continuing to work hard and staying on his game. So family wise, we're doing well. I hope you and your family are doing well also. Market wise, well, October ended up being a much better month. And frankly, we had a pretty good move in the equity markets. Bond markets stabilized. It was, certainly a better month. And then, of course, we had the Fed come out and had their FOMC meeting, and we had Fed Chairman Powell come out and give his report, and he was had what we call hawkish language. What that means is he is really, really committed. The committee is really committed to keeping inflation under control and raising rates as much as they need to raise them to slow things down to bring inflation under control. So they did raise the rates, which was highly anticipated, another 75 basis points. We had talked about that during our last conversation. 0.75% is what they raised the Fed funds rate. That gets us up to about 4%. But again, now the anticipation is we might see the Fed funds rate get as high as 5%. So we're expecting at least another 0.5% increase in December, maybe another 0.25% or 0.5% in after the first of the year. But they're going to be watching these inflation numbers very carefully. The consumer price index will come out on November 10th, and that'll kind of set the tone on what we might expect going forward. We do feel like we're getting close to the end of this cycle, but I think the market was pretty disappointed that the Fed did not give any lightening up tone at all. And that's why we got the market selling off last week. So I had a rougher week last week in the equity markets as the FOMC seemed very hawkish in continuing to raise rates. So a lot of volatility. I do feel like we're getting close to the end. It was nice getting the bounce off the bottom. Hopefully that was the bottom. Bond markets, again, seem to be stabilizing a little bit more. And here's a little positive spin. I mean, we're giving a little silver lining here. With rates popping up the way that they have, it's very challenging for the consumer. If you're buying a home, you need to refi your mortgage, you want to buy a car, things like that. It's very challenging because interest rates are so high, borrowing costs are high. But for us investors, we are the lenders. Always remember that. So when we buy bonds, essentially what we're doing is we're lending money and we're earning that higher interest rate. So for the first time in probably a decade, I'm pretty excited about buying bonds again. And even on the short term, even short term cash for a long time, where we essentially had a zero rate of return on our cash reserves, well, we could go out and buy treasuries now, short term treasuries that are yielding over 4%. So that's exciting. So that's good news, and that'll work itself through the portfolios over time, and we'll be able to lock in some of these new higher yields. And so that will help us going forward on the overall allocation, and some of our fixed income vehicles will have a much better yield going forward. So that's the good news. Stay focused on some of that. I know it's been challenging with the stock and bond market taking the big hits, but overall, we're in good shape. But if you have questions or concerns or updates, we're here for you. Again, my very best to your families. Thanks again for your trust and confidence. We look forward to seeing you soon. Take care and God bless.